Welcome everybody. My name is Kieran. I'm the Head of Aviation Advisor for KPMG, and welcome to another in our series of the Aviation Leaders Report. Today I'm delighted to be joined by Paul Meyer, who is the EVP for Aircraft Leasing and Trading with Airbus and part of the commercial division. Paul, thank you so much for your time. And Paul, maybe start a little bit by telling us a little bit about the area you work in, the area you lead.
Thank you, Kieran. I'm covering the aircraft leasing, trading and financing scope in Airbus Commercial. So this is all that has to do with dealing with all our leasing company partners, whether it's selling aircraft to the lessors or working with them, on placements and coordinating campaigns with the leasing companies. Work also on the customer finance side, helping our customers raise financing. Obviously, part of that is working with the agencies, export credit agencies, but working with all our financial partners, whether it's the banks and insurance companies and so forth. And then the trading side is our buybacks, trading aircrafts. Tend to sometimes buy airplanes back to help older airplanes usually, to help customers phase out older aircraft, and then we either place them back in the market or part them out. So that's the scope of the activity. It's all to support either campaigns, selling aircraft, or obviously very important these days, delivering airplanes to our customers.
And Paul, we might start a little bit. So it's a very interesting perspective focused on the lessors and how it interacts in terms of obviously balancing that with new campaigns. And how does, we say, the performance of the airlines impact that? Is it like a trickle-down effect into the lessors? How do you see that playing out?
No, I mean, it's obviously campaigns today are, with our availability situation that is being pushed further and further in the future with the rising demand. We're working more closely than ever with leasing companies jointly on some of the campaigns because they can address the short-term demands. We are looking at the longer-term perspective. Yeah. Credit plays a role obviously in this, and depending on the investment appetite or the lessors, portfolio and which area they are interested in. We work with different lessors. We try to tailor, the campaign to the investment appetite of our leasing partners or financing partners.
And you mentioned export credit. How do kind of the macroeconomic factors impact that? Does that have much impact on
Yes, Kieran. Very surprisingly in a way in the last few years during crisis, it was very different from the previous crisis, which was obviously the financial crisis, where we did a lot of export credit financing because there was a lack of appetite from investors during that period. This crisis is very different. We've been relying to some extent on export credit, and the export credit agencies have been available, but less so than the last crisis. They are going up to 10% of our deliveries in terms of export credit. This year it's going to be probably lower, around 5%. So there's a less involvement, but the ECAs, whether it's the European ECAs or Export Credit of Canada, with whom we're working very actively on the 220 program, they are very open to do new business. So we do see them probably coming back more actively in the next few years.
And if we miss, we didn't ask them from Airbus about the supply side and how you see that playing out at the moment.
Well, it's challenging here in really, as you know, in the last year in 2022 we started, just exiting COVID. We entered really into a supplier crisis, and that was a very challenging period for us. It's still continuing, although we see some stabilizing on the supplier side, but obviously we're now hit by some engine issues, which very much talked about. Latest issue with Pratt & Whitney, so a very challenging supplier environment still that we need to deal with. We're obviously looking much further into the supply chain, doing far more due diligence, trying to understand the risks, anticipate problems, whether it's our direct suppliers or BFE suppliers. But it's very, very active part of our management now to look down in the supply chain and try to anticipate the risks that may be coming. Can't predict everything, but we can do a much better job, which we're trying to do.
And you mentioned obviously the engine piece, but when you look all that together, have you seen an impact on asset values?
To some extent, yes. With the groundings we're talking about, due to the shortage of MRO capacity, there's going to be really there's a shortage of spare engines. I mean, really, to backtrack a little bit, during COVID, airlines were delaying shop visits and burning their green time, grounding planes, and not doing a lot of shop visits. When the market picked up, obviously, a lot of engines had to go through the shop, and the turnaround time had already increased. Now, that is increased by the problems we're seeing on some in service and durability on some of the new tech engines, and it's creating even more stress on the supply side. So we see that continuing for the next few years. It's going to drive used values up. We're seeing that already quite extensively on older technology aircraft and new technology as well. But we are really seeing a big shift there due to the lack of supply in the market.
Thank you. Maybe changing tack a little bit. You talked about, you mentioned about supporting your partners in terms of raising finance and stuff. Has the interest rates and obviously it's not high based on many years, but certainly in the medium term with high interest rates, has that had much of an impact?
Well, I mean, there was a lag, and all the lessors were talking about, with the rapid rise in interest rates, the lag in seeing the adjustments in the lease rates, and the ability to pass that on to the customer. I think we're now seeing that catch up. I think it's probably also driven by the lack of supply that is also raising the lease rates, and that's covering a higher portion of the interest cost. So we're seeing that normalize and stabilize probably in 24. Hopefully, during the course of 24, we see also a little bit of softening on the interest rates or decrease in the rates. We're already seeing obviously last week 25 bips on treasuries, but that's maybe just a blip. But we're going to see obviously a more stable environment we feel on the interest rates next year. On the financing side, I think the banks obviously pass on that cost directly as part of new transactions. I think it's been more challenging for the leasing companies to see the adjustment to the rapid rise.
And maybe expanding on that a little bit, have you any thoughts on the current debt markets, particularly talked on traditional banking for aviation, but even the capital markets or even new alternative lenders?
Yeah, it's a good question. We've been following the banks very closely, and we clearly see that the banks are more selective on where they want to put their money at work using their balance sheets. So we're seeing a shift really. You talk a lot about the alternative lenders, coming in the market, and we've seen some with a little bit mixed success, obviously, but some are pretty successful, and they're relying mostly on insurance money. And if they can stabilize that sort of funds from the insurance markets, then they'll be, I think, active players for years to come. But there's still a question mark, about the long-term viability of their source of funding. I think right now higher interest rates do, give them a better position because you can get better yields, and the insurance companies are chasing yields. So that's probably here to stay. We're seeing also new money coming in the market on the private equity side, whether it's Spain, Carlyle, or a few others that have been, Castlelake have been very active in the last few years. So I think those guys are really here to stay. They're building up their team, building up their platforms, very professional teams. So they're here, and it's definitely a shift in the market.
Very good. And you talked obviously about alternatives in terms of debt, but obviously, and from your perspective, you see things kind of, I suppose, from an Airbus perspective as well. Are you seeing new investors into the sector, and actually, how do you think the airline asset compares with other asset classes of the aircraft asset?
Yeah, I mean, the new investors I mentioned, it's institutional money, the insurance money, it's some private equity. So those are the new investors. We have obviously new lessors backed by, so some sovereign funds. So you see different pockets of money, on the market that weren't there a few years ago. But that's natural, in every crisis you see a turnaround, shifting in some of the sources of funding. On the asset class, I think, obviously we went through one of the most major stress tests you can ever imagine, and assets have proven, to be resilient. I think lessors and investors now see that, there's a very predictable cash flow over the life of an aircraft. I mean, it fluctuates, but when you take a 20 to 25 year life, obviously you have fairly predictable cash flows for assets. So that's provided, a fairly strong backing, of the assets, and the mobility of the asset also has proven again, during crisis as one of the key elements of aviation finance. So there's competing, obviously, pockets of assets in the market, and investors can choose where they put their money. But I think there are quite a number of investors that have gained to be much more comfortable with aircraft than before.
Yeah, very good. And during the pandemic, we clearly saw the percentage of leased assets in different fleets rise. Two parts to it. I suppose, look, what's your view on that medium term? And I'd love to know what would Airbus prefer in the medium to long term, more or less leased assets?
Yeah, it's a good point, really. And we've been following the rise of number of aircraft being delivered with, directly via lessors or through sale and leaseback. And when we look at, the last few years, single aisle on average has been around 60% of our deliveries financed by leasing companies. Overall deliveries, including wide bodies, it's more around 50%. As wide bodies tend to be more financed more with, directly on balance sheet with debt financing or export credit. What we've seen in the last 12 months is a little bit of a pullback, a shift back to on-balance sheet deals. Yeah. We've seen some people enter the market, including lessors doing finance leases, and quite successfully so. We're seeing some of the low-cost airlines that were relying really on the SLB market now, finance planes on their books. So that's an interesting development. I think there are also structures, available, on finance lease that are more attractive. Yeah. They're non-bank structures, but they give, good advance rates on the assets. And I think this is a trend. So we're going to see probably a little bit of a pullback from, doing all leasing, some airlines to only relying on leasing, and a bit of more of a mix. From our perspective, we like the diversity. We don't want everything to go into one pocket. We prefer to see different pockets of money, and it's more, stable for us to see a variety of sources of funding address the market. So we'd like to see the export credit agencies do more, hopefully. We'd like to see the banks, come back and do a bit more, so find a little bit more equilibrium.
And maybe a variation of that theme, if that's okay. So clearly in the last while we've had, reasonable amount of M&A, but we've also seen scale become very important in lessor. So again, I suppose, interesting if you think that kind of scale is becoming important, we continue to see M&A. But also from a perspective of you dealing with your customers, is it better to deal with, lots and lots, or is some of your leasing customers having real scale? What's your preference? Does it matter?
I mean, scale matters to some extent. When I look at the leasing landscape, we see obviously a large variety of investors with different appetites. But I think at the end of the day, it's quite simple, to have a credible lessor. It's not only about size, it's about having a platform with global distribution, being able to benefit from diversity. Obviously some scale to bring you most people to investment grade, which then gives you access to stable and attractive funding. That's obviously also a very important point. And then have a strong enough balance sheet to weather a crisis, a situation like we've seen in Russia, which has been obviously hitting some of the lessors' balance sheet quite heavily. So you need to build a scale to such a level that you can absorb these shocks, get the liquidity, diversity in your portfolio, being able also, if you have a strong enough balance sheet, to take advantage of opportunities in the market, whether it's M&A or bigger plays. So that's the type of scale we think is good. Maybe there's a point beyond that scale which it doesn't really matter. But we see this also smaller leasing companies, coming up that are obviously, very supportive, on doing, deals with us. Sometimes pre-repayment financing, which not everybody was willing to do in the past. So we that diversity for us is very key. Whether it's public lessors backed by big banks, whether it's China or non-China, lessors backed by private equity. That diversity we like. We wouldn't like everything to come from the same type of investor profile.
Very good. And maybe, look, I suppose, how do you see the ESG, particularly the E, impacting aviation for the next while?
Yeah, first of all, I think and foremost, we see that being a bigger topic with the banks today than the leasing companies. Although the leasing companies are also obviously publishing very developed reports on the ESG, but I think the banks are taking a more proactive role in that respect. Obviously they're now developing new products, loans that are stamped as ESG, with a focus on KPIs and sustainability. We see now tracking the airlines' improvements on sustainability. So there's a more ESG focus on the banking side. I think it's going to come more and more also on the investors that are funding the leasing companies. Eventually that's going to be a bigger focus. We are very focused at Airbus, obviously on the E, the S, and the G. But if we focus on the E, really we have a lot of developments, on the products. Technology bricks we're working on. We've spoken a lot about hydrogen. Obviously, that's a longer term perspective. Our focus today is also very much on the SAF area. It's just starting. I think next year we're going to be talking a lot more about SAF and investment into SAF. I think we're looking at opportunities. We already announced a few. But clearly, it's going to be, it's not going away, it's for sure. It's a growing focus. We have, from January onwards, a chief sustainability officer, in Airbus now, like it's been designated. So it's clearly a sign that the focus there on the E of the ESG is growing, and we're addressing that. We're taking it very seriously as well, because it's the viability of air travel, obviously depends on, bringing that transition through to meet, the net zero target that we've set, and following the KPIs that the market is looking for.
Very good. And finally, just if you look out over the next 12 months, what's your level of optimism?
We're very optimistic still, despite, some of the uncertainties, volatility in the markets. The geopolitical situation is still very, very tough. The latest events in the Middle East are being followed actively, and it's a worry. And, we are yet to see how this will develop and what impact this could have on global demands. We've seen obviously the recovery being extremely strong, and despite Russia and Ukraine, the airlines have continued to perform very well, especially during the last summer. Many airlines performed extremely well with record results. So we're optimistic. This year is going to be an amazing year from the order intake point of view. We're getting close to the end of the year, but it's going to be a record year. We're very focused however, on our deliveries. That's number one priority for Airbus. It's meeting our delivery target this year, and then looking into 24, how we continue on our plan of the ramp-up plan, which is a critical company objective, is to meet our ramp-up plan across the different programs that we have. So we're very positive about the outlook still, but we're cautious. We look at the risk. It's volatile, uncertain. It's complex. It's a tough environment. So we have to be agile and adapt to the market. But we're having a positive outlook for next year.
Very good. Paul, I'd like to thank you for your time and your insight. Pleasure. I'd like to thank Airline Economics for their partnership, and again, thank you for watching.
It's been a pleasure. Thank you.